Hello everyone, and equities are looking a little bit softer on the day as we head into the Federal Reserve meeting. But I would draw your attention to the fact that Australia's consumer sentiment is really down another 1% according to the Westpac and Melbourne Institute Index. So really no sign at all of any kind of economic rebound that's anything to write home to the grandparents about at all. So I think Australia is in trouble, and it's something people need to be aware of, that our economy has only had the smallest of bounces on the reopening up, and we're still a little bit lackluster in terms of the overall economic behaviour in Australia, and people are understandably cautious, as they are in much of the world. Doing a little bit of a walkthrough here, I hope you're enjoying it. I do think that we should not underestimate how quickly equities could fall this week. Of course, all the day traders in the world can't wait. They're looking for the opportunity to buy immediately after the Fed speaks or makes its decisions. What's going to happen when the Fed acts this week? Well, certainly bond buying is going to be wiped away as quickly as possible. Remember, we at ACY and myself, I've been saying for many months now that Australia should just immediately stop all of its bond buying because it's just really unwarranted in the first place, let alone having to taper because the Fed tapers is really a little bit of a nonsense. So hopefully the RBA will take notice of what the Fed does in the next couple of days and also begin to taper rather more quickly than it had previously planned. Currencies. Now, remember I said the US dollar was consolidating for a period of time? Well, that consolidation period is pretty much over now, and I think we're looking at a period where we could have another very fast move higher for the US dollar. And this will put pressure on the Australian dollar, of course, but also euro and sterling. I do like the idea of buying sterling Aussie on the cross, perhaps. I do like the idea that you do need to hedge if new lows are made in equities after the Fed says what the Fed wants to say. So just be mindful of that situation. Keep your eye on that. I really want to warn people that the weakness already seen in equities could intensify, that we will get some sort of rally perhaps out of the Fed meeting because it won't be an immediate rate hike. And for some reason, people think that's a reason to buy, but of course, there's not going to be an immediate rate hike. What there is going to be is talk of rather strong and bold talk, I think, of the prospect of raising interest rates early next year in the first quarter. And I think you're going to see a steady progression of rate hikes next year, at least 3 rate hikes in 2022, perhaps 4 by the Federal Reserve, and a complete elimination of all bond buying. Again, I'd say RBA, wake up, you're way behind the curve, you're the slowest central bank in the world. You really need to rethink who you are and what you're doing and try to catch up with the rest of the world. We've seen rate hikes in South Korea, Mexico, and other countries for some time now. Trading ideas, market direction ideas. I'd rather sell any rally we get in equity indices at the moment. And I would rather buy the US dollar on any dips we get at the moment. 2 of my favorite trades remain to sell Australian equities and to sell the Australian dollar as a general sell Australia theme. As the rest of the world realizes, Australia's in trouble as a trading nation with a deteriorating relationship with China, with global travel and ongoing supply chain disruption, with the disruption to our dislocation to our workforce that causes. So a sell Australia theme could be here to stay for some time. I still think Australian stocks are overvalued. I mean, they've been going down for nearly 20 weeks now. We've been bearish the whole time, and I think they can slide away at any point, so be careful of that. I do think it's going to be volatile around the Fed announcements. I do think we could have a small rally, just as all the day traders in the world, as I said, see it as an opportunity to buy against the economic development. But I think some of the larger institutions out there are going to be looking to sell any such rally. And that's why I would deem this week as still a bearish week outlook, and into next week, a bearish outlook for equities as well. Clifford Bennett, ACY Securities. Thank you very much for listening in. Hope I've helped. All the best to you in your day. Thank you.